I do think that to get to the much higher numbers, there are people that talk about 10,000, 20,000. It's okay to think about that, but if we got there too fast, if you somehow saw the future, I don't know if our regular lives that we would be living every day would be worth having gold at 10,000, because it would cause something far worse than what we're used to or seeing to get to that kind of number, say in the next, 1 to 3 years. It would be something really, really troublesome. Are there people hoping for that because they're willing to live with that stance just so they can make a score? Yeah, I guess there are. But if I said to you, if I had some control over it, I think we should be happy somewhere between 2,500 and 3,000 over the next 12 to 18 months. And something that we didn't talk yet, and something that I was able to not be Fonzie and say I was wrong about.
During the current 3-month period, from March to May 2024, there is a strong bullish sentiment surrounding gold and silver, with analysts predicting a significant uptrend that could see gold prices reaching up to $2,500 by May. However, these levels may fluctuate without consistent performance over a 5 to 8 day closing basis. PeterGrandich, the founder and CEO of PeterGrandich Company, who is a seasoned financial commentator with extensive experience, advises caution against too rapid a rise in gold prices to avoid potential societal disruptions. From a technical perspective, Grandich has made a bold prediction that gold will outperform stocks and bonds for at least 3 years, a forecast that has come to fruition. He highlights the generally overlooked success of gold, pointing out its consistent outperformance compared to traditional financial assets. While stocks have typically fared better than gold over the years, there are exceptions. For example, over the past 20 years, gold has surpassed the S&P 500. Currently, in 2024, gold has risen by 12%, outpacing the S&P 500's 10% gain, and is on track to surpass the S&P 500 by the widest margin since 2022. Grandich also discusses the challenges facing gold investors, such as disappointments with mining shares and junior resource stocks despite rising metal prices. He stresses the importance of understanding the underlying factors driving gold's recent surge, which he attributes to shifts in market dynamics. Although gold prices have reached new record highs in 2024, gold miners are still not achieving their peaks from 2011. Physical gold has significantly outperformed gold mining company shares over the past 3 years, one of the largest margins in decades. Despite mainstream Wall Street's reluctance to discuss gold, Grandich believes that recent substantial purchases of physical gold indicate a strategic move away from dollar-denominated assets and could signal a future need for gold backing. We now present clips of PeterGrandich's insights from his recent interview with SAR Financially. Before we continue with our discussion, please subscribe to our channel and activate the bell icon for timely updates.
Someone or some group bought a lot of physical gold for something more than a trade or speculation. I gotta believe it's a combination of wanting to get out of things that are dollar denominated, and also that there's going to be eventually a need for gold to back something, because new fiat currencies, no matter who's in charge at that point in time, are not going to be accepted after all this plays out. And that's why, despite money flowing out of ETFs and all that, gold is rising, because some group or people or group of people have been willing to pay, and pay hard, to get large sums of physical gold. And that's the underlining story to the gold market that you're not going to hear in the mainstream Wall Street, because you and I both know mainstream Wall Street will always treat gold like kryptonite. They don't want to talk about it because it goes against what they make their living off of: financial assets, stocks, and bonds. The bottom line, I think, if you think about it, I got involved with gold when it was back at 12.50. I got involved not because I thought the world was coming to come to an end and I'm going to need a gold bar to get a loaf of bread. I got involved because of capital appreciation. In 2021, I took a very difficult stance. And quite frankly, if I was still in the actual money management business where I would do it myself, I couldn't even done it. I wouldn't have been allowed to do it. But I literally, for myself and for friends and clients of our planning group, if they so choose to listen, I said that I felt gold was going to outperform both stocks and bonds for at least 3 years going forward. And it did. That's the untold story. And again, like I said, I'm not a bullion dealer. I'm not representing a bunch of ways that gold makes money. But understand this: not only did it outperform over the last 3 years and 5 years, but since January 1st, 2000, gold has outperformed stocks and bonds. for almost 25 years. You would think something that has done that much better, or at least as well, versus what most people spend time talking about, would even get a little bit of coverage, but it hasn't. And that goes back to what I said earlier, that they don't want to talk about it because realistically, if gold's going to go up a lot, I'll tell you this, guy. I always say this now for, I don't know, 20 years sitting in our planning group. I tell people that, listen, I'm going to want you to buy gold and hope it doesn't go up. And they always react the same way. Why would you want me to buy something that you don't think is going to go up? Because what little you're going to own, if it goes up a lot, what you're going to still own a lot is probably gone down. And that really has proven the case. It doesn't get the applause that it should get, given what it's done under what it's had to do. And part of that reason, and let's go to where proving that I am only human and put my pant legs one leg at a time, is because many of us who believed in gold, like me, also bought mining shares and went even down further the food chain to junior resource stocks. And for 2 years, as I scratched my head and watched a lot of money that I had made be lost on paper or actual losses, how could these shares be going down when the prices of metals are going up? And so gold has really surprised even the most ardent bulls. And I'm not talking about the people that always are. I mean, there's groups that are always saying silver's going to 300, gold's always going to 5,000. I understand that. That's their, they sell bullion and that kind of stuff. But realistically, you can see it in your talk is, wow, it really took off. And why? And that's, I think you need to focus on the why. This isn't something that went this way because it's just something flukily happened and it won't last. Something is changing dramatically, or people are anticipating it. And those people that anticipated got a lot of buying power because they bought a lot of gold.
With 4 decades of industry experience, PeterGrandich asserts that silver now presents its strongest case yet, positioning it as a promising investment alongside copper and gold. He offers insightful reflections on silver, recognizing it as a prized asset due to rising industrial demand and dwindling supplies. Industrial demand for silver is expected to reach 711 million ounces this year, with usage in solar panels alone climbing by 20% to 232 million ounces. In his astute observations, the seasoned analyst anticipates significant opportunities in the industry, citing the shrinking global landscape for mining exploration. His optimism is fueled by the evolving global mining landscape and his predictions of rising prices for gold, copper, and silver. Let's return to the interview for more of Grandich's insights.
I think we should be happy somewhere between 2,500 and 3,000 over the next 12 to 18 months. And something that we didn't talk yet, and something that I was able to not be Fonzie and say I was wrong about. And that was, I put a lot of emphasis into mining shares in my own portfolio and junior resource stocks. Until 3-4 weeks ago, that was looking like a really poor decision. But I think at 2,500 to 3,000 gold, I believe copper is going to 5. I think silver will get up to 30 and trade maybe to 35 or 40. There's a lot of money to be made in an industry now, Kai, and I know this is where you live and breathe, that 20 or 30 years ago, you and I could have been at one of the conferences we've been at, spin a globe, point our finger there and say, yeah, we can go mining there. Not anymore. The world has shrunk for the mining and exploration. And before big corporations put $1 billion or more into some place outside of North America, they're going to think twice for some of the things that we've seen happen. And it's going to take, like for copper, I think well above 5, because the grades have shrunk, the sizes of deposits have shrunk, and the risk have risen for these companies. If there's anything to be said about PeterGrandich that can be printed and stated, it's that he tends to be too early. But I go back to an old mentor of mine who said to me years ago, it's better to be 2 years too early than a day too late. And I think it's still early for the mining and junior resource company. Other than Dave Morgan, because I'll always read his stuff, even though he's always stayed primary silver. I always thought he just loved it. He wasn't somebody who was just saying it because it sells. But I used to get beaten up by the silver bugs because I would always make a comment at the gold conferences that silver was like kissing your sister. versus owning gold. But what's changed for silver compared to back then is the fundamental argument has gotten much better. A, much more industrial use than used to be, and B, the dramatic drop in supplies. 20, 30 years ago when I used to manage money and talk to guys, they would say, well, silver's just a byproduct in what we're looking for. We toss it aside. We're interested in copper or gold or whatever. But the usage of silver and the availability of silver, and let's also understand this, if I'm right about this, I think people are going to think twice to go to certain places for it. Mexico used to be a place, if you said silver mining exploration, when I was managing money, that was it. You said silver and Mexico, those were two words that come together. I don't know if a lot of people are going to want to run down there as much as they might have been also. I think silver has a better argument, or let's put it this way, the best argument it's had since I've been involved in it in 40 years. So I feel that we should treat all three compatible: copper, gold, and silver. I don't think one is dramatically better than another now based on their current prices and the outlook for fundamentals for them.
Analysts at Citibank, as quoted by CNBC TV 18, suggest that the global price of gold could potentially reach $3,000 per ounce as more funds flow into exchange-traded funds backed by the precious metal. Given this bullish trend in gold and silver prices, how do you plan to navigate the opportunities and challenges presented by current market dynamics? Share your strategies in the comments section below. If you found this video helpful, please support our channel by subscribing and turning on notifications to stay updated with our latest content. See you in the next video.